Are you an entrepreneur with businesses overseas, maybe in Asia, maybe in Europe, and now you're wondering what your U.S. tax responsibilities are? Hi, I'm Chad Silver, managing partner at SilverTaxGroup. We build these plans, we implement them, and we defend them if necessary. I've been practicing tax law exclusively for over 15 years, and my firm has been helping clients for just as long. And today I'm going to walk you through one of the most confusing areas of international tax compliance. Form 5471, who must file it, why it matters, and how to mitigate the penalties. Real-world IRS Form 5471 client example. Let me give you a real-world example. An entrepreneur recently hired my firm for FBAR and Form 5471 compliance issues. Over the years, he set up about 15 companies in Asia in the hospitality space. None of them were profitable, most are now defunct, and none were even registered in the United States. He does own one U.S. company, but that's totally unrelated. Here's where the IRS comes in. He filed some tax returns, but he missed others. He's already on a payment plan for prior years, and he's now realized he never filed FBARs or Form 5471s for those foreign corporations. That's when the penalties start to snowball. And it's also interesting for him to say that he was on a payment plan, but if you're out of compliance, which means you haven't filed all your tax returns, then you're really not in a payment plan that the IRS formally recognizes. Who must file 5471? So who actually has to file this form? The IRS divides the filers into 5 categories. Category 1 was added under the 2017 Tax Cuts and Jobs Act. Usually applies to U.S. shareholders of certain specific foreign corporations for transition tax or GILTI purposes. Very rare right now. Category 2, U.S. person is an officer or director of a foreign corporation where another U.S. person acquires 10% or more ownership in that entity. Category 3, that U.S. person acquires or disposes of stock in a foreign corporation that hits or crosses the 10% ownership threshold. Category 4, U.S. person who had a control of a foreign corporation during the year. Control means more than 50% of voting power or value. Category 5, U.S. shareholders of a controlled foreign corporation, which is a foreign company, more than 50% owned by U.S. shareholders, each holding at least 10% of that entity. There's key triggers here. 10% ownership starts most filing obligations. 50% ownership equals full control filing. Even inactive companies may still require filings. Does Form 5471 trigger a 1040 requirement? This part confuses a lot of people. Form 5471 is not filed on its own. It must be attached to a U.S. tax return, usually Form 1040, 1120, 1120S, or 1065. So technically, the 5471 doesn't create a 1040 requirement, but in practice it actually does. So here's an example. You're no income in 2024, but own 100% of a foreign company. Normally, no 1040 would be required because there's no income tax filing requirement. But to file the 5471, you still have to submit a zero income tax 1040 with the form attached. Form 5471 penalties. Here's where it gets serious. There's an initial penalty of $10,000 per form per year per corporation. There's a continuation penalty. So if you ignore the IRS after you receive a notice, even if you don't receive it, but they send it, there's another $10,000 that stacks on every 30 days, kept at $50,000 per year. Foreign tax credits can be reduced. The statute of limitations on your entire return stays open indefinitely if Form 5471 is missing. Rarely, willful failure may trigger criminal penalties. And willfulness is very, very, very complicated. It's controlled by an interesting case called Cheek versus US, which I talked about extensively in front of large groups of other tax professionals. Here's an example. 2 foreign corporations, 3 years missed. That's $60,000 in penalties right off the bat. And if ignored, it can continue and grow up to $150,000 more in penalties. How to mitigate Form 5471 penalties. Here's the good news. There are ways to mitigate the penalties. One, and the most common, is a reasonable cause defense that shows you acted responsibly but didn't know. That must be supported with a detailed statement. Number 2, streamline filing compliance procedures for non-willful taxpayers. Usually this will wipe out the penalties. 3, voluntary disclosure program, VDP, for willful cases. This is higher penalties, but you get protection from criminal prosecution, which is extraordinarily important. 4, delinquent international information return submissions. If no tax is owed and the failure was non-willful, file late with a reasonable cause statement. 5, post-assessment abatement. If penalties are already assessed, you can still appeal with a reasonable cause. Key takeaways. Form 5471 is triggered by ownership or control in a foreign corporation, usually starting at 10% ownership or 50% control. Even if your foreign company is inactive or defunct, the obligation often continues. Penalties are steep, but if you act quickly, there are programs and defenses available to fix the problem. If you own foreign corporations or you're just realizing you may have filing obligations that you missed, don't wait for the IRS to contact you. That's the worst thing you can do. At SilverTaxGroup, we build the compliance strategy, we implement the filings, and we defend you against IRS penalties. I'm Chad Silver, a tax attorney and managing partner at SilverTaxGroup. We build it, we'll implement it, and we'll defend it if necessary.